Hope you're all doing, and that you have an awesome month and the rest of the year. We're now in the last 4 months of 2024. Can you believe it? Of course, September means a lot of things, right? So right now, obviously in the U.S., it is the Labor Day holiday weekend, and obviously in many countries around the world, it's still a weekend. In some countries, it's already a regular work day, as Sunday normally is, and in those countries, a lot of schools have started, and kids are going back to school as they will be doing across Europe and the U.S. There's always somebody who has to lean on a horn, thinking it's going to fix some problem. That's hilarious. Um, and so, yeah, if you're in one of those places where it's still a weekend and everything's chill, enjoy it. And if you're in one of those places that's bustling around already, well, enjoy that too, I suppose. So what else does September mean? Well, September means a lot of things, right? People come back from vacation, so typically a lot of people in the Western world are going back to work after maybe having had a couple of weeks off sometime in August or whatever. And although, of course, it's not uniform, it's not like the whole marketplace is on vacation in the same 2 weeks, but it is, in fact, quite common to take some time off in July or August. And kind of the workforce in general is not 100% in a lot of places between July and August. So even though people are working, usually, depending on the job, especially if it's an office job, they usually have less of a volume of work. So it's a little bit slower in the summer in some respects. Of course, if you work in service jobs, that is not the case at all. Obviously, if you work in a touristy place and you work in a service job, then summer is usually the busy time of year where you earn a good chunk of your revenues, right? If you're a waitress or bartender or any kind of service job in a hotel or taxi, doesn't matter. Anything where you have to interact with tourists and guests, people traveling around using services that they might not usually use as much during the rest of the year. And obviously, the back half of June, but mostly July and August, tend to be the busier times of the year for those people, right? Think about how many service jobs you've ever done in life. I find that people who have never done any kind of service job have a very different perspective on the world than people who have, or any kind of physical job, really, right? Physical labor of any kind, manual labor of any kind. I find manual labor to be extremely respectable work, and not that other forms of work aren't, but I've always had a tremendous amount of respect for people who can do manual labor for the length and breadth of their career. Just as I obviously, respect people who have other jobs too, but, in fairness, it could be said that, office jobs are oftentimes cushier than doing hard grit manual labor jobs. I don't think there's anything wrong with saying that. Yes, you can have a lot of pressure and all that stuff at an office job, but physically it's not quite as challenging, right? At least most of the time. Anyway, why am I talking about all this stuff? Back to school, back to work stuff. Well, because September also means something for marketers, but more importantly for traders. Well, important for both, really. For traders. And that is that the markets tend to come back in September, slowly but surely. Right? They tend to make their grind back to full size, and we tend to see nice movements starting to happen in September and October, comes in November and December, but it kind of starts, percolating usually after a summer, when again, only, just I'm talking about the number of people trading, not the whether or not there's volatility or anything like that, right? You can see this summer, right, there was plenty of volatility to be traded, right? It's just there's more people doing the trading from September to December, right? That's the only difference. It's not that there isn't volatility or that there's necessarily more now. Will there be more volatility hour by hour, day by day in September to December? Well, it could be. You could also have, price movement that is more significant with less volatility. Sometimes that happens too, right? Because price movement is not volatility, right? Price movement is the result of volatility, right? Volatility is the standard deviation of returns when it comes to trading. It's not the movement of the price. Of course, journalists who report about the financial world, like the markets, will tell you that that's what it is. And why? Because financial analysts will tell them that that's what it is, even though they should know better if they're financial analysts and talking heads and trading YouTubers and all this kind of stuff. They should know it's not. They should know what volatility actually is, which is, again, the standard deviation of returns, or you could also call it the spread of data around the mean. But the standard deviation of returns is more specific because, so spread of data around the mean is specific as long as you know we're talking about the mean of returns. Right? Standard deviation of returns specifies returns, so people should know. But most don't, even professionals. And you know why the professionals don't know, or why they don't tell you? Well, they don't want you to know. Right? Who's they? Well, the people who do know and who know how to use that information to their advantage. Who's that? It's the high frequency trading firms, big algorithm shops, the people that control the money on the market and that actually run most trades on the market, which by definition means they run the markets. If you look at their positions and their position size and the speed they have and the info they have, you'll understand they very much run the markets. Right? There's a reason that they are profitable consistently, quarter after quarter, year after year, raking in billions, right? Why is that? It's because they know how to trade volatility properly and entropy and probability and statistics well. Most of them know how to trade entropy properly. Some of them don't. And when I say most, I mean the very top firms, not the average high-frequency trading firm. Not that there are really any average ones these days, but the ones that are in the middle of the pack, they really, or on the lower end, they don't really trade entropy. Not so much yet. Some, it will be very normalized within a few years probably, that they will. Just as it is very normalized that they trade proper volatility. But it's just that trading entropy is still relatively new. But, they adapt fairly quickly once they see that it's a profitable way to do things. Um, but there's still probably years of good trading returns for people trading entropy properly. If you wonder who's trading entropy properly, well, at Alpha Trading, we built what is undoubtedly the world's best entropy indicator available to retail traders anywhere, because it shows you not just the entropy, but the correlation of it, either via the Shannon entropy percentile or the alpha squared entropy power percentile. And that, when combined with the entropy, shows you the tendency of the probability of the price action going up or down or sideways. And don't take my word for it. Come look at it on the live streams we do, or come see it in the channels where we post messages in the chat all day about trading the VEPs. And you can see for yourself just how powerful our tools are. Now, should you expect to see $1 million Bitcoin at the end of 2024, or before the end of 2024, or sometime in 2025? Well, the answer is probably no. Oh, hello. Hi, man. Oh, you look good today. Okay. Okay. Hi. Good to see you. I would not expect $1 million Bitcoin by the end of 2024 or even in 2025. Why? Well, look at the VEPs. Look at the projection bosses on the VEPs. Right? Look at the monthly projections. Is it impossible? No, it's not impossible. But it is very well beyond like the 99.7% probabilities. Right? Does that mean there's a zero probability? No, there's never a zero probability. We can always increase the probabilities. Right? Yeah, we can always go to higher probabilities, but 0 and 100 are not really probabilities, worthy of observation in that sense, because they're hardly ever a thing, right? Because there are always mathematically some kind of probabilities when you're estimating things into the future. Does that mean that Bitcoin is going to go to 100K even? Or 500,000? 250,000? No. Those are all, again, probabilities. Is there a probability that Bitcoin will hit 100K this year? Yeah, there's a very good probability. If the asset on the weekly time frame has, confirms that the mean reversion is in progress, right? Once it stops hitting the third band of the downside, which it did again last week, right? Once you got a couple candles of not hitting that band, it's very likely a mean reversion. Can it skip 2 bands? Can it skip 2 candles and then hit on the 30? Yes, that just happened, which is why I always say that. Okay. But once it skips 2 bands, it is usually in mean reversion. So the next time it skips 2, it will very likely be in mean reversion. In any case, whenever it does actually, demonstrate that it is in mean reversion after 2 or 3 candles or whatever, then if it walks up relatively slowly towards that RMLR, which is above, at the moment, if it were to shoot up there, I didn't look at this new week yet, but last week when I was looking at it, it was around the 79K area and grinding up to around 108K by sometime around the week of October 21st. And from there, kind of taking it easy between 90 and 108K through March of 2025. Which, if you think about it, happens to coincide with a whole lot of interesting other things. But you don't want to trade based on that information because that's just lagging information. Even if you know about the events ahead of time, like regularly scheduled things that happen every year, 2 years, 4 years, whatever, we're still looking at a bunch of information that's lagging if it's news related. So we don't look at news for trading. But in terms of can the asset and can crypto in general and can the markets in general see more record highs this coming quarter, I mean? We're still technically in Q3, right, for September. But in Q4, is it possible? Like I said, it's possible you can see those record highs anytime. It could happen this week, right? I mean, it could, right? Is it likely to happen this week? No, not so much. Is it likely to happen next month? Well, again, depending on how the assets perform over the next several weeks. You know, if we have an amazing September that isn't too hot, but just kind of warms the pipes and gets everything going, then it's entirely possible that we could have a pretty raging October that could see new record highs for a lot of different assets, including crypto. And again, Bitcoin could definitely go to over 100K even in October. And it could be a rip-roaring Q4. Now, something I want to just quickly mention is wallets and who has what. Now, if you remember last week, I told you this a couple times, 91% of all crypto that could ever be mined is already in the wallets of people who have 100 or more Bitcoin in their wallet. And if you look at the percentage of people who have 100 or more Bitcoin in their wallet, like, it's only, whatever it is, like 10,000 people or something like that. And if you look at the number of people who have more than 1,000 Bitcoin in a wallet, if you look at the number of wallets that have 1,000 or more Bitcoin in them, it's like 1,300 wallets or something like that worldwide, right? So the biggest wallets in the world, which have tens of thousands of wallets in them, each one, or even hundreds of thousands, in a single wallet, which is nuts. But, yeah, I mean, it's nuts to keep that many in one wallet, if you ask me. There's no additional cost to creating more wallets, and you make yourself more secure. Don't keep all your eggs in one basket, as they say. But in any case, wallets with tens of thousands of Bitcoin in them, wallets with only, with 1,000 or more, there's only 1,300 of them. Think about that. There's only, so when you include the ones that have 100 and the ones that have 1,000 or more, 100 or more or 1,000 or more, you're talking like less than 10,000 wallets own 91% of all Bitcoin. 10,000 wallets, less than 10,000. And they own 91%. And the rest of the world owns 3% of all the Bitcoin that there can ever be. And again, the remaining 6% has yet to be mined. Think about that. All right? Think about how insane it is that an asset that in theory could be a decentralized currency that could actually be used as an economic solution for a lot of things is controlled by less than 10,000 wallets. And when you realize most people don't keep all their Bitcoin in a single wallet, especially if they have a large amount, you realize there's less than 10,000 people on Earth who control most of the Bitcoin. People, companies, organizations, governments, whatever. There's far less than 10,000, right? Individuals in control of most of the wealth on the planet at this point, most of the Bitcoin wealth anyway. Well, who controls most of the Bitcoin wealth? It's the wealthiest people and companies and organizations and governments on Earth. So if you ever wondered, are you in the club? Well, if you don't know, then as George Carlin put it, it's a big club and you ain't in it. So anyway, on that note, happy trading, happy Bitcoining and stuff like that.